Good evening, everyone. SpaceX officially closes its IPO. Then they turn around and make an offering in the bond market. What's that about? Rocket Lab stock is in focus as it officially joins the NASDAQ 100. That didn't take long. Canada's MDA Space buys Blue Canyon for $620 million. NASA tells Northrop Grumman to stop working on the Halo module. That means Gateway is officially dead. Space startups are seeking insurance now for their orbital AI data centers. Elevation Space gets a $40 million Series B. North Star secures over 40 million Canadian with 3 Canadian Space Division to advance sovereign space domain awareness. Ariane Space successfully launches 36 additional, ready for it, Amazon Leo satellites with an Ariane 64 equipped with advanced boosters. So I guess Amazon Leo found an alternative to Blue Origin. Dawn Aerospace closes a 25 million Series B. And ready for this? Do we need a lunar building code to build moon bases safely? Will that just slow everything down? All this and our returning guest, Ron Wiener. From the news desk at the Center for Space Commerce and Finance, my name is Thomas Andrew Olson, and this is The Unknown Quantity. As you know, this show is hosted by the Center for Space Commerce and Finance. And what is the center? We champion and strengthen emerging space startups and space-adjacent enterprises worldwide through advisory, access, and advocacy. Our legendary pitch events and world-class boot camps fortify startups to be better investor ready. Now, a lot of our work, especially this podcast, is supportive of our listeners and fans like you, all of you out there. So let's go to cscf.space/support. And click that Point of Day donate button. A little in the tip jar each month makes a big difference. Don't forget to like and subscribe and tell your friends. Speaking of friends, my oldest space friend, Michael Lane, who just finished offering communion to our guest this evening, is here with me. Michael, come on in.
Hey, how's things?
You're trying to initiate him to your new religion.
Yeah, right on. How's things? What's going on?
Okay, well, actually, I went to the gym today. I went back to the gym for the first time in like a month. And now I'm just a wreck, of course, because you haven't been in a while. I was like, oh man, what did I just do?
Right.
You know, no time for a nap today. Forget that. I got a show to do.
You got stuff to do. Yeah.
I want to mention one thing. This is a complete aside. It's not on the script. Today is June 22nd. That would have been my mother's 98th birthday. She left us in 2012, but she would have been 98 today. So thanks, Mom, for everything, and still miss you. Yeah, that's kind of what's going on in my world. What's going on with you?
Still limping a little bit from that fall last week. So not going to the gym, but starting to get back into the rhythm, starting to do a little bit of walking. It was a hell of a tumble. But I'll be fine. I'll be recovered by this time next week.
So you still have like 7 lives left, right?
No, I've used a few. ask me about some of those Marine Corps stunts I pulled. No, I've used a few of my lives for sure. Yeah.
All right. Okay. Let's just start right in because our producer is pushing us already. So we want to get this done quickly. Veronica Ann's here, Jason's here, Morty's here.
Hey, everybody.
We're getting the usual suspects. Come on in, guys. Welcome. In latest news, I know Veronica has gone back to her original birth name, Aliberto. And so congratulations on that.
Good news. I hope that is good news.
Yes. Total independence, freedom. Yay.
Yay.
So, Jesus says, gravity is your company's friend, not yours. Yeah, I get it. I
from
get it.
Jason.
Okay,
Yep.
so these first two things are actually kind of back to back. They're kind of
Yeah.
multiple ironies because SpaceX are officially gave a release in the details. They announced their official closing of their initial public offering, including a full exercise of the underwriter's option to blah, 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 blah. But then we have right after it, we have a article in Reuters that says SpaceX is launching a note, some
Right.
kind of option, not an option note. What is it? It's a
A
bond.
bond. It's a John.
Bond.
It's
They're doing a bond
bread,
issue.
bread
Yeah,
and
sure,
butter
like 100 billion or
American
something.
bond.
They hope to get 20. And so,
Yeah.
well, that's too bad. They're giving you that subscribe nonsense because I got the full article today and I don't even know why. Usually they do that stuff to me, but
it's just a bread and butter bond, just any other big corporation can do. $20 billion. It got investment grade, triple B plus, BBBs, no A's, but triple B plus. They're expecting to sell it pretty quickly. So get this, right? So they started, let's go back maybe 2 months. They started with nearly $20 billion in a checking account, 15 or 18 billion, depending on what you're counting. Plus Bitcoin, plus their Bitcoin, which is kind of a different asset. Then they raised 75 million, and then all the folks that were the underwriters for the IPO, they exercised their 10, almost 11 billion. Total 85 billion of new money on top of the, let's call it 15, 18 billion before. So they had $100 billion in their checking account, and now they're asking for 20 billion more to retire the other old debt. So, yep.
Okay. All right.
Banking systems. Yep.
Yeah. Meanwhile, it's still being volatile as heck. Just a few days ago, it was trading about 211, 216, something like that.
Yep.
It's back down to 156.
Yep.
My broker put in a just dreaming. He put in a put option for me at 150 for sometime in July.
Okay.
And we're only 8 days away from July. I thought, God, I could make it.
Right.
Right, they're going, I could make it. It can really happen. So we're both having a laugh about that. Oh, yeah. Okay. What are the odds, Because he wasn't going to chase it, remember?
Yeah.
He wasn't going to chase that price up and down. So I thought, I'll just do a put option at 150, see what happens. I'm only $6 away, dude.
I think, buy the dip. It's the oldest rule in Wall Street.
Absolutely. So how much Bitcoin have you gotten recently? Because it was up at 110 at one point, and now it's 62K.
Yeah.
Buying the dips, dude.
No, I'm not. I've not been putting money into anything in a long time. But my broker boss, when I was an investment advisor, his line was, when he was talking about buying IBM or whatever, if you liked it at 20, you'll love it at 15.
Yeah.
Right? If you like it at 20, you'll love it at 15. So, true. Right? If it made sense before. Anyway.
That's it. Well, that was the big mess in Microsoft history when they had to go from a growth stock to an income stock.
Right.
That was a weird day.
Yep.
For everybody.
Yep.
Okay, so now I didn't even know this. I knew Rocket Lab had stock, but I didn't know they officially joined the NASDAQ 100 today.
I think that's a big deal, and it's not getting a lot of traction. And because of SpaceX, they actually lost, which, again, that feels like buy the dip too. Again, always we say we are not investment pros anymore. We haven't been licensed in more than 20 years. So.
But we just can't help but notice things.
Right.
We're the great noticers out there, and that's what we do.
Right. But yeah, SpaceX got in the NASDAQ index in the first matter of 2 weeks. That's their plan. But Rocket Lab did it the old-fashioned way. They earned their way in. So hats off to Rocket Lab. Love these folks.
Yep. And a lot of these things go by fairly quickly. Canada's MDA Space, the people who gave you, I guess, Canada Arm, they're buying Blue Canyon in a $620 million deal. That's a big number, so I thought we'd at least mention it. And they're getting it from RTX, which is Raytheon's business.
Yeah.
And so buying it from Raytheon, interestingly.
Go ahead.
Yeah, go ahead.
Blue Canyon, if they're who I'm thinking of, they were a relatively new company to get that sort of valuation. If they're who I think they are, they came out of an incubator accelerator in 2019. I know this because we tried to get Liftport into that same incubator and we were declined. We got shortlisted, but we were declined. And I think they made it in. So they were doing space domain awareness. And it's important to note that that incubator is right down in the center of Colorado Springs, right beside Space Force, right beside the beginnings, Space Command and the Cyber Command were all right there. So they could go out and get their clients next door. Right. So pretty interesting evolution.
Yep. Okay, let's get through this. Moving on. NASA told Northrop Grumman to stop working on the Lunar Halo module, which is a significant piece of, I guess the project used to be known as Gateway.
Yeah.
I don't know if they're going to use it. There are certain components, like the power delivery components, are going to be used for deep space missions now. They've already parted that out. And so they finally just put the hammer down and said, nah, stop building it. This is going to end up like the Buran, just in a gathering dust in a warehouse somewhere. Right next to the Ark of the Covenant.
In that great big warehouse.
Yes.
Right. Yeah. No, it's true, though. I wonder what's going to happen with this thing. This one flagged my attention because I'm like, space station? L1 counterweight. What could I use that thing for? Yeah.
Hey, how about a little both? A counterweight and a space station.
Right. Yeah.
It's both a floor wax and a dessert topping. Look at this.
Right.
We've got it all.
So I don't know. It was kind of intriguing. As far as I can tell, it's the last nail of the coffin that's already, almost in the ground. So
yeah.
I suspect Europe will want to say something about this, but we don't know. Yeah.
Oh, no, we'll wait 10 years. You know who will buy it?
Who?
Bigelow. It'll be for a comeback. He's going to do a big comeback.
I would honestly like to see that. I think that would be great.
Too, actually. Especially if he's got all that weird space tech, from Skinwalker Ranch that he could put in there. Yeah.
Yep.
Love that show. I love that show. Okay. So that's a big deal, kind of. Now, here it is. I love this one. I never even saw this one coming. Space startups seek insurance for orbital AI data centers. Kind of makes sense.
Mm-hmm.
But apparently, they're actually speaking with insurers about coverage for orbital AI data centers. That's a big deal since no one's ever built one yet.
Would you? I don't know that I'd insure it. There's no actuarial tables for it. I'm not sure I'd be the guy who down.
Who's going to underwrite that? Well, you haven't ever built one yet, but you want $200 million in coverage in case something goes terribly wrong.
It'll be fine.
Yeah, let me sign there.
Right. I don't know, man. I do. I wonder about that. But that insurance thing it's heating up. That topic is heating up. We're going to have a guy on our show here. Sean's got it confirmed. I don't remember when, but I think in the next couple of weeks. The insurance topic is underappreciated, and I think that there's some real opportunities there. So I would not underwrite space data centers just yet, though.
No, that seems a little premature.
We had a guy on our team, Tom, a different Tom, that he would say he was a 51% believer in space elevators. So right on the edge, like on the side, but right on the edge.
Right.
I think I'm about 57% believer in data centers because I don't think they figured out the form factor yet. I think the idea is sound, but the
Yep.
form factor I think is a mess.
Right.
So yeah.
Yeah. Okay. So
Sean
there's
is telling us the insurance guy, his name is Huck, is going to be here on July 16th.
okay. That'll be an interesting program. So Elevation Space, which is apparently, I don't know, in Japan, they're developing space to Earth transportation down mass, as well as an environment utilization recovery platform. They've raised 40 million in their B round to a third-party allotment of shares. That's the largest funding round they've had in their history. And I think their total value is 63 and a half right now. And so it's all for small sat lift guided reentry is what they're doing. But they did that like today.
You know, I don't have that much to say about this company or this, this round. What I do want to point out to y'all is that they listed their investors, and to me, that is a target list. Like, oh, I should call them and them and them and them and them and them.
Yep.
Now they'll most likely say no, but I always like seeing other investors' lists because that's useful. So
Yeah.
yeah.
Yep. And more money. A company called North Star secured 40 million Canadian with 3 Canadian Space Division, whatever that is, to advance more sovereign space domain awareness. Here's that word, the S word coming in again.
Yep. Huh. This is interesting because if this comes in basically in the same week as the MDA play, that's also space domain awareness.
Yep.
I
Absolutely.
wonder if this is positioning Canada for Golden Dome money. I bet you it does.
And it is. I'll bet it is.
I hadn't thought that through, but
Golden Dome would include them. So yeah.
Right. 2 different space domain awareness deals in a week from our northern partner, which is basically our northern buffer to the Russians. Yeah. Or Chinese, coming over the Arctic. Yeah. I bet you that's a Golden Dome play. I didn't really think about that until both of them came in online at the same time.
Pump and dump play. That is so totally true. My God.
I mean, look, wait. I mean, you're making fun, but look at Canada's history. Canada has played the ESA versus NASA card so well, balancing between both of them and pulling money in from both directions. They're very good at that role. And so they've read the tea leaves. They've looked in the crystal ball. They look at 185 billion. Some people argue 1.2 trillion in Congress. They're looking to get some real numbers behind that. But either way, a space domain network from our northern partner makes some obvious sense. It's part of the reason why we were looking at annexing or invading Greenland or buying Greenland, right? For that exact same position. So, yeah, that makes sense. I'm just spitballing here, but I think it's on the right path.
All right. Okay. A couple things to go because I want to get that last one. It's going to be so funny. There's another money guy. Dawn Aerospace closes 25 million Series B to accelerate global expansion of reusable space transportation. They got an Aurora space plane, they say. They got 195 million post-money valuation led by Valerian Space Ventures. And they're based out of New Zealand, apparently.
We talked about them last week, and this gives more information, a little bit about who they are. They've got some of the stuff sitting in their Dutch assets. When we were talking before the show with Ron, these folks are some of the folks that are thinking about doing some of those in space, can we have babies experiments.
Right.
Lab on a chip kind of stuff.
Right.
So, yeah. Um, yeah, pretty neat.
But interesting company, and they're going to do some stuff in Oklahoma too, I guess.
Oh, I hadn't seen that.
Yeah, it's near the end. Yeah.
Is that the fabled Oklahoma spaceport, the O prize that those folks were talking about 20 years ago?
That would be a good question. They don't say that part. They just
Holy
say,
cow.
yeah.
I mean, think about that. All right, so let's explain to folks the O prize. So there was the X prize that everybody's excited about for $10 million to get to orbit. Oklahoma, back in 2000, call it 2005, let's just say, they offered a $20 million quote unquote prize of tax credits and other incentives for companies willing to domicile in Oklahoma. And they had a few takers, some of them that we laughed at for a while. None of them that actually survived past the X Prize competition. But I can't think of any other reason why you'd put something in Oklahoma. So that's interesting.
Well, maybe there's testing stuff. They're basically going up above they're usually suborbital flights. They're going up above the Kármán line and coming back down again.
Mm-hmm.
And they want to be able to do that twice a day.
Love that.
So now, here's the thing. Here's how we end it. This is going to drive everyone nuts. You ready? Your head's going to explode.
Right.
Here it is. A group of people got together and they had a little conference, and they decided we need lunar building codes. At the 26th Space Resources Roundtable held just 2 weeks ago at the Colorado School of Mines, should stick to mining. So what is needed is a lunar building code with specific design criteria. Now, we already know NASA's building a habitat. China's going to build one. We don't know what everybody else is going to do. But then, but that construction will be off to a shaky start, said someone who, Nirma Kaluk, who's an engineer and lunar specialist. I didn't know they did this. Skidmore, Owings, and Merrill. My father actually worked there in the 60s. So I know a little bit about that company. But and so a lot of that has to do gravitational acceleration to resist seismic lateral forces and blah, blah, blah. And so since that's governed by mass rather than weight, the lateral demand on a structure remains active while gravitational restoring capacity is diminished. So once things start wiggling a little bit, like on a moonquake, they're not going to stop wiggling for a while.
Fair. Okay.
So how do we build it, given the complete difference in mass to weight ratio than we normally have on Earth? I guess that's what they're trying to say. And just raising those questions.
I'm okay with that. Building a homeowners association on the moon, maybe I don't love. Because I think I can think of a lot of ways that can go south fast.
Yep.
But I love Leonard David, right? The author here. So, I'm gonna give the topic a little bit of the benefit of the doubt because he's seen a lot of wackadoo things in his 40-year career. I think we do need to have standards. I 100% agree with standards.
But they should be established through hard work and actual like in place. You got to start. You can't learn anything about this till you start doing it.
Right.
It's like like back in the end of the 90s, some guy was trying to set up space governance for Moon and Mars when we weren't even close to building a settlement or flying there or anything.
Right.
But God, he wanted a constitution and everything. Come on.
Right.
Let the Martians figure that out when they get there.
Right.
Right. And so this may be a similar problem.
Yep.
And Sean is right. There's one thing I didn't mention, just to close it up. It doesn't even have to be posted, but apparently a whole bunch of satellites for Amazon Leo.
Oh yeah, yeah, yeah.
Well, 36 satellites launched on an Ariane 64 booster today. So, or just a few days ago. So looks like we were all worried about, when New Glenn blew up. Oh God, what are they going to fly on? Everybody's going, oh God, it's terrible. Well, it didn't take them long to figure it out. 36 satellites are up there now.
Well, okay, that actually was part of a mass block that they bought back about 3 years ago. This is not a reaction to the launch pad explosion.
But mark my words, it will be. They're already making new deals right now. You can bet money.
Yep.
That was the point.
Yeah. No, it's good. It's great. I am very happy with it. I'm going to just post Jason's comment here. Yeah, SpaceX is building a new dedicated return vehicle, Starfall, super cool looking, very big, does put Varda in the crosshairs, but we're a big fan of downmass from space, things created on orbit and coming back home. So bad news for Varda, good news for the world. So curious to see what they do with this. Thanks, Sean. Thanks, Jason. We did have it, but we want to kind of get on with our guests. So,
yeah. So, good news segment. We whipped it off pretty well. And so, let's get our guest in here because since he was on the last time, we couldn't wait to get him back. And this guy just blew all our minds the last time we was here. And so we needed another hour, with him. So here it is, coming live your way right now. Ron Wiener, CEO of Venture Mechanics, and we're basically going to pick up where we left off because it was absolutely amazing. Ron, come on in, man. Welcome.
Howdy.
Yeah.
How's things?
With an intro like that, you're really putting the pressure on. Jeez.
Hey, we talked about some of your aerospace background last time. I don't want to dismiss that. But I want you to talk a little bit about your role. You've got your title here, Chief Mechanic. What does that mean? Why are people asking you about funding their company?
Okay, so I've been raising venture capital for my own startups for the last 42 years. It's been an interesting, what's the word? Let's just say the rules keep changing. The goalposts keep changing. And I've been on the investor side for 26 years, and I've run 4 accelerators, incubator accelerators over the last 26 years through Venture Mechanics. And so I think we are at an inflection point here because of AI, deep tech, all these things that are happening. But at the end of the day, we view the mechanics of building a startup as where we help the startups, right? So I'm the chief mechanic, but we have several hundred mentors. And if they are CMOs, they're marketing mechanics. If they're engineers, they're engineering mechanics. It just means that these are the folks that are helping the startup founders figure out their way, build a viable, fundable business plan. Now, when VC was first invented, all right, so we're going back to the 60s. Okay. Little by little, things happened that made them lose their investment, right? And so they talk to their lawyers, and their lawyers go in and say, well, we should add this clause to the term sheet, and then this clause to the term sheet, this clause to the term sheet. And there were certain law firms, Wilson Sonsini, Venture Law Group, certain firms over the years that really architected a lot of what is today the Series A term sheet, right? Series, by the way, that just means that it's a priced round. You can have a Series seed, but typically a term sheet from a VC, significant round, they're throwing their weight around. They're going to ask for all the preferences. Those things kind of made sense, adding them. But what has happened over the years, and I'm moving a little bit away from your question towards sort of the topic that you guys wanted to talk about today, but what has happened is there's been a continued misalignment between the investors in tech startups and the founders, to where everything's great in the first year or two. You just got your money. They love you. They tell you how big they think your company's going to be. And that you have to really understand how venture funds operate. What are their incentives? And the longer you go, the more misaligned you become. And in fact, the worst nightmare is you got a Series A VC on the board, you got a Series B VC on the board, you got a Series C, D, E, F, G, H, and they all have different timelines of when their funds need to harvest the deals. If you go past that term, they liquidate the company because the partners do not get their 20% carry off the top if it happens after their fund is termed. And so it's typically 10 years, sometimes with a 1 or 2 year extension. And with deep tech, you have funds that are 15 years suitably. But the book that I published last week that you've passed out here, it was originally entitled, I'll say it on this podcast, it was originally titled Lawyers, Venture Capitalists, and Other Useless Roadkill. And at the last minute, I asked Claude to come up with a new title because I was afraid of offending some VCs and lawyers that I'm still doing business with every day. And so it changed it to Other Useful Predators. I thought that's pretty cool because anyone, any lawyer or venture capitalist reading this is probably going to go, yeah, I'm a useful predator, but AI has changed everything, right? And obviously, if you go into Google and you just ask for founders talking about getting shafted by lawyers and venture capitalists, you're going to see an incredible volume of work, right? But it's getting worse and worse and worse. And AI has come along all of a sudden and made it 1/10 of the cost to launch a company compared to 2 years ago. Last time that order of magnitude drop occurred was during .com
days,
right? And so now it's 100th of what it was 25 years ago.
Yep.
And a whole lot of businesses just became very viable with very little capital. We hear in our own internal incubator, what we call Venture Forge, it takes us about 3 days to launch a company right now. Right. It's absolutely incredible. And we know that the capability of AI is growing exponentially by the end of the year. It's already mind-blowing, but it's really becoming quite incredible where you can train it on these are the elements of starting a company. Go do it with giving it, maybe 3 paragraphs of prompt saying it can write the business plan, the pitch deck, the website, everything. And so, as mechanics, we try to stay up on the latest trends, but they are now moving at supersonic speeds, right? Just like, Musk called it a supersonic tsunami yesterday, right? Yes, it is a supersonic.
I've been referring to the wave after wave after wave of new capital coming into the system as a tsunami. It's not ripple effects, it's wave after wave, it's tsunamis.
So look at the combination. You're taking exponential trends and multiplying them by each other, right? Because you have all this new wealth from all the employees. I think there were 4,400 millionaires that were minted by the SpaceX IPO.
Yep.
And we are going to find out who they are.
Yeah. Well, they're going to let you know because they're either going to self-fund their next startup or they're going to set up a venture fund or become LPs and be influential in this area. But they're going to have a lot of great ideas and they're going to know a lot of other great founders. And
unconfirmed, I got this from a pretty reliable source that I can't name, but there's an expectation that there's 500 new millionaires in Seattle because of Starlink in Redmond. There's probably 500 new millionaires up there.
Sure.
Yeah.
Not that we had a shortage here,
shortage.
Between Microsoft and Amazon and everybody else in our neighborhood. But yes, there are 2.3 millionaires now in the United States, right? There's only a few thousand billionaires, but that number just went up significantly, right, overnight.
Right.
And you got 3 more $1 trillion IPOs with Anthropic, OpenAI, and Databricks coming up.
Yep.
So you're injecting an incredible amount of capital. And the same thing happened. So I made an incredible amount of capital in 1999 with my .com. And what did I do? I immediately started investing like a wild man, right? Anything that moved, I'm in. I'm in for 100. I'm in for 100.
Right.
You know, so there's going to be a lot of capital sloshing around at the same time as the tech layoffs have led to an incredible increase in the number of startups that are launching right now. Now, most of them, to be honest, are garbage, right? I know AI. I think I'll go out there and I'll start an AI startup. They shouldn't do that. You know, they should, if they've never done a startup, if they've lived inside Microsoft and Amazon their entire lives, they should probably join someone else's startup first, you know, develop some chops.
Learn the
But there are an awful lot of people launching AI wrappers that are never going to be funded. I mean, I get 6 business plans a day over the transom, and most of them are not fundable, but at least 1 or 2 a day are. But they're fundable in a new paradigm where you would not want to go for venture capital. In fact, they typically have already gone out for venture capital, and they tell me they were told repeatedly, not surprisingly, you shouldn't raise a VC. Why? A VC needs you to never get profitable. A VC needs you to continuously raise rounds. You're on a treadmill. You took an A round, now you need to go get a B round and step up. I mean, it started with your pre-seed round and seed round, and then your Series A, Series B, Series C, because the way they market themselves when they're launching their next fund is by showing, look, we invested at $1 and Michael raised another round of $3. Aren't we geniuses? We had a 200% IRR increase. And that is how venture capital works. That's how these funds work. So you can't go in one day to your board and say, hey, you know what? We're making 80% margins on this AI stuff.
Mhm.
And why don't we just distribute the cash to investors? Let's do a dividend. And of course, as founders, they get a lot of it themselves. They do very well. No. You're keeping all your money, all your cash in the company for growth. You're pressing the revenue line as fast as you can because the multiple on the revenue is how they're going to get their stock pop, their takeout. This is, I mean, we see with SpaceX now, depending on what day of the week, between 100x and 200x revenue. Or sorry, 100x and 150x revenue. Right? That's an insane multiple.
Yeah.
But it's multiple revenue multiples.
It's dropped into the 30x because of the new deals. So it's still 30x is still a lot, but it's not 96, which is what it was when they went public officially.
I haven't looked at the exact numbers, but right before logging on to this, it was 93 to 145 was the multiple based on today's price.
Okay.
So it's still outrageous, but you know the VCs are going to get out at some very high multiple. And instead, you're sitting there and you're going, wait a minute. I built my business plan in Claude. I built my website in Claude. And then when I asked Claude, hey, how should I incorporate? I wasn't talking to a startup attorney. I was talking to Claude. And Claude said, how much money are you going to need to raise? Oh, maybe $300,000. When are you going to be profitable? Oh, in 6 to 12 months. Well, go build an LLC. Don't go after venture capital. So all of a sudden, I'm seeing nothing but LLCs, which is very refreshing to me because I've been screaming it from the mountaintops since 2009. You should start every company as an LLC because it gives the founders and the early investors, if they have any passive income sources, your losses are distributed pro rata to all the shareholders or members in an LLC. Same thing as shareholders in a C corp, and they get cash in their pocket. They get to offset their apartment rental income or whatever when you haven't even made money yet, right? So this is something that no VC can benefit from because they are legally not allowed to invest in LLCs. And by the way, venture funds are themselves 3 tiers of LLCs. There's the venture fund, there's the vintage of the fund, partners, that's a separate LLC, and then there's the LPs down here, and they're a separate LLC. So in the old days, if you said, oh, we're going to invest in LLCs, your CFO would shoot you dead. No, these are all pass-through entities, right? You got an incredible amount of reporting, and there's always one startup that's late with their K1s, right? And so they just outlawed it, right? And said, no. Besides which, we want to take advantage of QSBS tax benefits. So that's all they get. They get the QSBS, which is a waiver on capital gains for qualifying startups. But that's at the end. That's at the exit. What they're giving up is at the beginning the ability to benefit from the tax losses. And then when the company starts to generate cash, it has to pay off its maximum tax exposure for its members, including the founders. But then after that, if there's extra cash, you can distribute it out. And you can't do that if you have a VC on your board. But if you made an extra $500,000, founders get 400,000, the investors get 100,000. That's fantastic, right? Because with this kind of very simple LLC, what we dubbed free flow LLCs, and that label took off, that concept is like a common stock. Investors coming in common stock, never creating preferred stock rounds. You're perfectly aligned. If something's good for the investors, it's 4 times as good for the founders, right? So always a decision of when you convert to a C Corp. Eventually you will want to convert to a C Corp 3 years at least before you sell the company, so you can get that QSBS capital gains waiver at the end. Or you're doing so well, hey, let's go get a 50 million round at a 500 million valuation, but you're a very profitable company. You can step away from any negotiations you don't like. So, you can, it made sense, convert to a C Corp, take a venture round. But starting as an LLC maintains maximum optionality. And if
I keep wondering how I can apply this idea to Liftport. It feels like I have to roll back in time, like I have to invent a time machine in order to take advantage of this. Tom just raised $1 million, so congrats to Tom. Are you a C Corp or LLC? Did this conversation even come up when you guys were doing this?
No.
No,
I don't think so. I don't think. No, we're not an LLC. We're a privately held company in the UK. So their rules are different.
Their rules are a little bit different, but actually quite comparable. They have the equivalent of QSBS. They have other investor incentives, and so does Canada. In fact, a gentleman took my the earlier book, the one on Free Flow LLC's field guide, and he made a Canadian version of it with full credit. It was very nice of him to do that. I was going to do it eventually, and I've been talking to some people on LinkedIn in the UK, and we're going to create a UK version of that guide as well. So we just gave that out to the world, right? It's actually very, very simple. It's the law firms that over the years made things more complicated. They have cleaned up no matter what. So let's look at the math, right? You've got all these venture funds, thousands of venture funds, each one investing the point of it is that founders who get a pre-seed round and then a seed round and a price round and eventually an exit, only 1% of them, only 1% of those founders get wealthy. Okay.
Mm-hmm.
Even the 2.5% that have returns to investors after the waterfall of you got to pay off your venture debt, this investor had 2x liquidation preference, et cetera, like the case of FanDuel, sold for $465 million, the founders got 0. Right? So when you don't understand the math and these term sheets come through with all this incredible language, it's just it's too taxing, even for a PhD in AI, to sit there and try to figure it out. Right. So my second book, the one that just came out, the Lawyers, Venture Capitalists, and Other Useful Predators, blows the covers off of that. It actually explains every clause in a term sheet so that you understand what you're signing. But this is the amazing thing. You guys are talking about insurance. And I think insurance is critically important in deep tech, as in AI. We'll come back to that. I really want to talk about insurance today. But in the insurance industry, if you have a lawsuit, there are law firms that only have insurance companies as clients, and there are law firms that only have plaintiffs as clients. The two do not cross over. However, there's no such thing as a no peeing section in a swimming pool. Every startup lawyer has VC clients. The VC clients are worth a lot of money. They're going to send a lot of deal flow your way. The founder has a 1% chance of getting wealthy, right? And so the standard answer is do a Delaware C Corp. Sign the term sheet.
Right.
Don't even try to negotiate it. You want the money, sign the term sheet.
Right.
It's non-negotiable. But you got to look at where their incentives are. Again, there's no evil here. It's just very simply looking at where are the incentives.
Follow the money. Where are they? Where is their ultimate paycheck?
Yes. Yeah. So what's happened is all the LLMs now, if you ask it, oh, I'm building this AI startup company, agentic AI startup company, This relates less to deep tech, obviously, although there are AI companies in the space area, right? So if they only need $1 million, they're never going to have more than 5 employees. They're going to be cash flow positive within a year or two. It's a whole different kettle of fish. You don't need to go the VC route, lose control of the company, have all those layers, what's called the waterfall, which is all the carve outs. So, for example, they negotiate a term sheet with you at a 20 million valuation. But before their money comes in, you have to expand your option pool, right? Say, oh, we got to take the option pool up to 20%. That dilution is coming off the founders. If there's ever a down round, that they have what's called a ratchet, anti-dilution ratchet. They get made whole. If they bought 13% of the company before, they keep 13% of the company. It comes out of the founders when there's a down round, again and again and again. So I post a lot on LinkedIn about this, one at a time. You're going to see in July, every day in July, I'm posting, one of these things for founders to understand. So anyway, times have changed. It's really, really interesting. A lot of really cool companies can be created with almost no money now. And when you think of the other aspect of this, really, really important to understand, is that venture capital is a game of winner takes all. So you hear that in tech, there's typically 2 or 3 winners. There were hundreds of rideshare companies launched. You can name Uber, Lyft, and Waymo.
Yep.
Right? In agentic AI age with these LLCs, you can have 50 companies, all profitable, selling software to dental practices, right? There is no more winner take all, and so they don't have it. And they raise $1 billion. They got to put it to play. They can't just sit on it. So they need deals that consume a lot of hardware. Well, deep tech is one of those places where you're not going to be able to get away from VCs very easily. But everyone who intends to launch a startup in space needs to read the book, because you need to understand those term sheets, what they really mean, and imagine the down scenarios. Right there is a cataclysmic economic event every 6 to 10 years. That's between COVID, 9/11,
go back into
mortgage crisis. Yeah, always is, right? And that tends to create down rounds when that happens. A lot of companies get flushed out. A lot of venture funds get flushed out. I'm writing a new book now that'll be out in a month or two, called Behind the Velvet Rope, right? And it's for investors. And sure, you hear about venture funds that have incredible returns. They invested in Anthropic secondary shares or something, but you can't get into those funds unless you have a $5 to $10 million check, right? You got to be known to them. You're typically a fund allocator, like a pension fund or an insurance company. They don't even need individuals. And the hard part is getting allocation in those funds. For everybody else, here's all the ways that you as an investor in a venture fund, they do the same thing to you that they do to the founders. They have all these carve-outs, from their 2% per year management fee to all the different things that they deduct. And so you get actually like a fraction of what you would have gotten if you invested directly in the company, yet they convince you that they will have outsized returns because they're really smart. And when 93% of them have no operating experience, never built a startup in their lives. They went from Stanford straight to the venture fund, right? So anyway, I think it's an amazing time, because at the end of the day, every time we've had an inflection point like this, like we did in 1997 with cloud computing, we call it cloud now. Back then it was client server, then it was ASPX. Remember? Eventually they say, oh, cloud computing. Okay. And now with AI, it changes who can build, who can start a company. And a physician who doesn't know anything about programming can sit down, talk to Claude, write a business plan for the medical space, and launch a business plan and start generating revenue literally in 3 days. So it has changed who can go into the business dramatically.
He doesn't seem like he's on today, but we actually have a medical doctor who's a regular on our show, and he's got a nonprofit, a space-focused nonprofit. But he took a couple weeks. He wrote a book. About space and about commercialization of space and the moon, Mars. Sorry. Yeah, I mean, it's very doable. These tools make it so easy. We're building with just a team of 5 people, about to be 6 people. And it does kind of change the dynamics.
So there's two elements to this, right? When you talk about AI, there's maybe you're actually using AI in the product that you're delivering. But the more important part is actually building your company from scratch to basically use AI in place of people, right? You don't need to hire the same number of people as you used to before, whether it's engineers or administrators, even salespeople. The AI can do a lot of the functions of a salesperson more efficiently, be a tool for them, and you need one or two salespeople instead of a 10-person staff. It changes all the economics. So it's really learning how to use AI. Why is that important? You look at incumbents, you look at niche markets that had two competitors for 40 years. And those two competitors are still shipping Fortran and COBOL code. They've never had any real predators around, right? They're like the Kakapoo in New Zealand, you know. And all of a sudden, a guy comes in and is like, "Hey, you know that software is really ancient. I can build this whole thing in AI and show clients how we can process their engineering, their development efforts in a week that used to take 5 months with the incumbent software, and we're going to kill it, and we're going to kill them." So incumbents are too slow to move because they always look and say, "Oh, but we're still making sales," right?
Yeah.
Yeah.
So the first reaction of an incumbent is defensive, right? Any large corporation is defensive. And if they're a big enough corporation and they see a bunch of startups popping up, great, sit back, wait for the one that's going to succeed and buy them. Except it's not going to be like that anymore. Now there's going to be 50 of them, and they're all biting at your ankles. And you're going to sit there one day and go, well, we can't stop supporting our current platform while we go hire people and learn what to launch. Oh, wait a minute. You know, will any of these guys sell to us? Well, why should they? You can't afford them anymore. It's like that time span is going to go so quickly. There's going to be a lot of lumbering giants that are just going to fall like the ah-ahs in Star Wars, right? They're just going to, you know.
Oh, it might even be worse than that. I was talking to a buddy of mine about a year and a half ago. He was playing with AI for the first time, and he does a lot of big deep background, web coding, right? And so he asked the AI to do some coding with him, a specific thing. He figured himself it would take him about 2 or 3 weeks to write this, and he put all the parameters in, and the thing wrote the code in about an hour.
Yeah.
And it was perfect. Every line of it was perfect. There's probably 300 lines of code, 500 lines of code is perfect. And he just sighed. He looked at me through the screen because he's from Thailand. We're having a Zoom call. And he says, "Tom, this thing is going to replace India." The whole damn thing.
So we've got one of our guys. We're looking at the moon, right? And how much sunshine is it going to get during its 14-day cycle? He went to NASA, found a public database, dropped it into our bespoke AI tools, and in a matter of minutes, he plotted out on such and such a day at such and such a time, are you in sunshine or shade? Yes or no? And what's the temperature?
Yeah.
That kind of work, I have no idea how much time that would have cost.
Oh, it's unreal. I have a drone company, and we were talking to a customer that was an airport, and they said, well, why don't you site your drones on the airport, and you can also serve the community around us. And so I jumped on while we're on the call, and I asked Claude, hey, what percentage of the population lives within 30 miles of one of these airports? And we were specifically looking for the 2.5% of airports that have scheduled airline service and therefore have what are called ARF units, so fire trucks, right? Mm-hmm. And it came back in a minute saying 93% of the U.S. population lives within 30 miles of 2.5% of the airports in the United States, right?
Wow.
Like, oh my God, that would have been so hard. We'd have to build a database, collate data,
right,
and try to figure it out with, MSAs and all this stuff. Oh my God, absolutely incredible. So there's no end in sight. It's just getting so much more powerful every single day. But I want to talk a little bit.
Okay, go ahead.
I want to talk a little bit about insurance because this keeps coming up. And if you look at any major infrastructure, and there's no question AI is now major infrastructure for everything.
Dependent.
And you look at every major infrastructure, like the finance system, the banking system, right? Real estate. Any major institution has grown slowly enough that the government could put in regulation, and insurance companies can figure out, well, if you have FDIC insurance, your risk is this, and if you don't, we're not gonna back you, right? But you have to have actuarials, and of course, in space, there's tremendous risks, pretty much akin to pushing your ship through the Strait of Hormuz right now. And the reason there'd be a lot of those ships would be attempting to go through, except their insurance companies say you do that, your insurance is off, right?
Right. Yeah.
So they ultimately control everything. But right now, if you went to an insurance conference, this is the amazing thing. They are talking about how are we going to assess the risk of these moonshots? How are we going to assess the risks of AI? And so they're very, very busy on the next renewal of every liability policy of any kind, errors and omissions, directors and officers, product liability. All of them are carving out claims due to AI failures or hallucinations or whatever, right? Because we already had 2,500 lawsuits filed. The big one, Mercor, is $1 billion suit. And this is 2010 all over again, when cybersecurity became a thing. And they were caught flat-footed and paid out billions of dollars before they said, you know what? We're not covering cybersecurity in your standard policies. You have to get an endorsement or an add-on policy. There are dozens, if not hundreds, of insurance companies launching right now, all attempting to create products to cover you for AI. Why is that important? Well, let's say you're a B2B software company. You want to sell to this enterprise customer. And the enterprise customer says, you know what? Our CFO has told us we need to get any AI software that we're using, they have to indemnify us. So do you have an insurance policy to indemnify us? Well, no. Well, what's your balance sheet look like? Oh, negative. I'm a startup. Oh, yeah, we can't buy from you, right? So like at least a third of the companies currently out there that are AI companies trying to sell to enterprise are going to find this out when they're trying to make the sale. There is a lack of governance. There is a lack of insurance. There is a lack of understanding. And now think about how hard this problem is. What corporation isn't using AI in every single corner of the company? Right.
I would close Liftport without access to AI tools. It's that important.
Right.
And we're building a life or death, don't get it wrong system.
Sure. And so is running a hospital, right?
Those damn machines have lied to us every single day. And we know it, but we then have to kind of fix it. Yeah.
Right. So, putting aside the technical solutions for deterministic versus this kind of AI that hallucinates, there is this missing infrastructure. There's a lot of companies scrambling to try to fill it in to create governance. But the insurance companies need the governance there before they can proceed. So there's going to be a couple of years of sheer mayhem for startups trying to figure this all out. The insurance companies, man, they are wigging out. They are moving as fast as they can to not get caught flat-footed like they did last time. Only the problem's 1,000 times harder than cybersecurity was.
All right, in our last 2 minutes, give me some predictions. Pull out your crystal ball. What does 5 years look like? What does 25 years look like?
In SpaceX stock price?
Surprise me.
I think SpaceX is heading for $50 quickly. Wow.
Wow.
Infinite.
Let that sink in for a second.
Yeah.
From 225 midweek last week, 150 starting point down.
You got to look at fundamentals. It's a meme stock with an extremely high beta, meaning very high volatility. So there's a 4x difference between the top target price and the bottom target price.
5 weeks from now or 5 years from now?
We're going to find out in 6 months after all the lockups are off and all the big block holders have sold their shares. I bet by that point it'll be well under $100. I mean, it dropped $30 today. Yeah. And so I would say by the end of the year, it's probably 50. That's my guess.
That is the most pessimistic version I have heard.
No, it's not. There's No. There's real analysts who do it for a living with major investment banks that are calling it 50, and there's others that are calling it 200. And then you got ARK and others, who, just like she did with Tesla, right? Tesla was supposed to be a $3,000 stock today.
Right,
It's
yeah.
still 300 to 400, right? There are some who are calling it, $50 trillion company by 2030. I just don't think so.
No.
There's this thing called gravity. My favorite comment somebody posted on one of my SpaceX LinkedIn posts was, if only he could use the chopsticks to catch the share price, Mechazilla to catch the share. Well, he's not going to be able to, right? And people will sell out to buy Anthropic shares and to buy OpenAI shares and to buy Database shares, right? It's going to be rolling liquidity so they can buy the next IPO and hope that it goes up.
Wow. Tulip Mania wins again.
Right.
Yeah.
And on that, we fortunately have to close it out. We're at 9:00.
Dang, that went fast.
Too fast. I know we're going to do this again. Every time we have you here, it's just a flood of things. If I had hair, the hair would be blowing back like the wind, getting all your stuff. It's just, I want to do this again and again. I'm going to read your book. I'm going to devour your book starting tonight. And I'll have questions for you on that next time. We're going to have you again. We're going to have you again a lot. Ron Wiener, Chief Mechanic, CEO of Venture Mechanics. Thanks so much for joining us.
Thanks, guys. Take care.
See you soon.
See you around. Yeah.
Okay. Thursday, one of our favorite guests as well, Space Systems architect Dallas Bienhoff is returning to the program. Yeah. And he's going to tell us about some of the new stuff he's working on and see if he can actually talk about it. Yeah. That'll be fun. So for Sean Key, Michael Lane, I remain Thomas Andrew Olson. Keep watching the skies.